All right. So, welcome to episode 3 of the Corner Office podcast. I'm here with Paras Bhasin, amazing mortgage agent with Referral Mortgages. My name is Charles Cheang. So, I've been working with Bhasin for it's probably been about a year now.
Yeah, more than a year now. Yeah, I remember I met you at one of the open houses, man. I
Yeah.
was looking for an investment property. I met you there, and I was like, I didn't end up buying that house with you, but we definitely stayed in touch, and then things went very well after that.
Yeah, and
Yep.
I don't know, it's been a great relationship
Yeah,
so far, and I can only see brighter features for both of us.
definitely.
So it's really nice to have you here. You're the first guest
Oh, okay,
on
thank
the
you.
podcast. The first 2 episodes was with members of my team.
All right.
So you're the first one, and I wanted to bring you on here because real estate agent, mortgage broker, it goes hand in hand,
Yeah, we
right?
do work closely with that. Yeah,
Yeah. So basically, I had a few things I wanted to chat with you about, but why don't you start by telling the listeners of this podcast of your journey getting into the into the mortgage world and why you started, and tell us a bit about yourself as well.
definitely. So I started mortgages. I got my license in 2020, and I came to Canada in 2018, and I was very interested in real estate things. You know, buying houses, selling houses. Things were very. I was very fascinated by looking at houses, and I was in Canada. My first thing was me and Shobna. We were like, we want to buy a house in first 6 months when we were in Canada, and we did. In my first 6 months, I bought my first house, and I'm glad that we did. It was a very good decision.
That's the place in Canada, right?
Yes, that's the
Okay.
place we live in. So yeah, it was a good decision. Excuse me. And
Have you always been good with numbers, or
oh yeah, maths and numbers is one of the things I always loved. And when I learned about mortgages, mortgages is an industry. I think, and I thought this is something I really want because you play with numbers all day, and you get to talk to a lot of people. You get to help them buy their houses. There's so many solutions you can provide to the customers, and the smile you see on the customer's face when they buy the houses and they call you, Paras, thank you so much, you helped me buy the house, and
for
that's
sure,
a great feeling.
for
You
sure?
you have had that too, right?
Yeah, I thankfully
Yeah,
it's
yeah, yeah.
it's been mostly smiles.
Oh yeah, yeah.
Yeah. So okay, that's really cool. So you said when did you come to Canada again?
I came in 2018.
Okay, 2018.
So not
Yeah.
a very long time. So three and a
Yeah,
half
no.
years back.
So and to see that's impressive and what a lot of people inspire to be, right? You come to a new country
Oh yeah.
and you start brand new. I imagine you didn't know too many people, right?
No. Yeah,
And
no.
yeah, to start brand new and to go into something like commission based, it's tough for sure. So I'm big kudos to you for that.
Yeah, no, I think the all credit goes to my friends and the people I knew. They were good to me. They trusted me initially when I was
Yeah.
new. When I was new, there are a few people who trusted me with the mortgages and stuff. And when they saw me working, they saw how available I was for them. It was weekend. It was 11 in the night. They called me. They're panicked about anything. They called
Yeah.
me. I just answered them, and that make them sleep.
Yeah.
In the
Yeah.
night, right? So yeah, they so since then, I'll say first 5 deals is what the harder part was. Once the 5 deals were done, those 5 people referred me five people each, and
Yeah. Getting people to trust you initially
yeah,
was hard for me,
yeah,
especially when I started. I was young, a lot younger when I
yeah.
started. Right, I was 20 years old,
Oh yeah,
so it was very hard. And the way I look at people, yeah, definitely hard for that. So yeah, good for you. Good for you. I wanted to touch base on interest rates. So I get this question a lot, and I'm sure you get it even more.
definitely.
It's like people telling me, "Oh, what's happening with interest rates? Is this going to cause a dip in the prices? Is it like what's the ripple effect?" There's so much. There's so many variables actually. So I just wanted to hear your take on what do you think about these interest rate increases and what kind of like what's next? What do you predict?
So so prediction wise, if I had a crystal ball, I can tell you exactly what's going to happen. Right, there's going to be an increase or there isn't going to be an increase. It's not really hard to tell what's going to happen right now because I was just before coming to this podcast, right? I was reading about Mac Teflon, who's a governor of Bank of Canada. He said last year that they're going to keep the interest rates to the lower level by end of 2022 or at least middle of 2022, which did not happen, of course, because they have started increasing interest rates very heavily right now. They did a 25 points hike last month, and then they did another 50 points hike.
Yeah.
That's the increase they haven't done in like last 20 years. After 20 years, they did a 50 points hike. I I think the reason behind this is first is inflation. Inflation, we haven't seen this inflation in like maybe 50 years. So it is 6.7%. It hasn't been this high inflation, but now the inflation is going higher. And you asked me the prediction. I would hate to say that, but I think we're expecting more hikes this year.
More hikes, eh?
Oh yeah, definitely.
How many points you think?
I
and I'm not going to hold you to this. This is just curiosity. We all have our own predictions.
Yeah,
right?
this is just a guess. I think it's going to be another 0.50 hikes this year. So maybe
hikes.
0.25 in June, 0.25 in November. But then there are going to be 2 more hikes or at least 0.50 hikes this year.
Yeah. Do you think that, how much do you think that it affects people's buying power? Because I know when the qualifying rate was increased last year.
Yep.
The clients that I've dealt with and the clients that, the referrals that you sent me, they were affected. So I'm curious, does this affect as much with the interest rates increasing more than the qualifying rate increasing?
No, it is not going to increase it by a lot. I mean, even if the interest rate increased by 50 points, it's not going to impact the client's buying power as of now. If it increased more than 50 points, then yes, there might be a chance that, clients will have harder time getting houses and whatnot. But for now, a 0.50 increase is not going to impact their buying power. But you would have seen it. Clients are already scared. People are already scared. People who have bought houses this year or the last year, I get calls every time that they're getting emails from their banks that the interest rates are going to increase. So good thing is we already discussed. We had the discussion before even I closed the mortgage. We have had the discussion that this is going to happen. They were ready. I told them if we go fixed versus if we go variable, variable is going to increase, so they were ready for it. So it's good. I mean, they just called me that we got an email. So I just tell them, remember we discussed about it. They're like, yeah. So they're ready.
I know I completely agree with you. I've actually noticed on my end the listings that I've had have had a harder time selling.
Yeah,
I think the last couple of weeks the media has been really kind of coming down on this interest rate increase, and they've been like lots of posts, lots of articles, lots of videos about it, and unfortunately it's affecting listings. And I think the last couple weeks, if you've bought anybody out there or if it's a pretty good couple weeks stretch of kind of lowered pricing, and I think that's and I mean, so I do this last couple of years I've been doing more listings, and unfortunately that does take a toll. on
definitely.
That. Yeah.
But I'll say interest rates are increasing. They're not that high. They are just coming back to normal. These last couple of years, after COVID-19, the numbers we were seeing 1.1, 1.3, even 0.98 was not. It isn't that something which never happened, right?
0.98.
Yeah, we did mortgages at 0.98, which is unbelievable. I mean, you're getting a mortgage of $1 million mortgage at 0.98%. This is the cheapest money.
I'll tell you, mine is not 0.98.
0.98. Yeah, not 98. It's 0.98 definitely. So it's the cheapest money, right? You get you're getting less than 1%.
Yeah.
So that's a very cheap money. So people bought houses, and I think what's happening now, it's just normalizing. We're just going back to the normal pre-pandemic period. So before pandemic, interest rates were like 2.7, 2.9. This is what it's going to head right now. Mm-hmm. And this is happening. Yeah,
I mean, I hope that we can enter more of a balanced market. In terms of, on my end at least, more a little bit more even, not too crazy of a seller's market, because it's been 2 years of that, and it's hectic for everyone. So hopefully, that does change with these interest rate increases.
Hopefully, the clients we had who have been looking for houses for like 2-3 months, they'll get the house now, right?
In their budget and something that they like. And which leads me to the next topic. You and I both work with a lot of first-time home buyers. Just wanted to get your take on tips for home buyers, first time home buyers specifically, because if you've got 300K of equity in your home, you don't need to hear this,
Yeah.
but it's for the person that is just trying to get into the market and
Right.
enter and not fall behind. So kind of what advice do you have, and maybe what tools that you guys offer to to help incentivize a first time buyer to purchase?
Sure. So first thing is, talk to your mortgage broker.
That's a good step.
That's the first step. And no, secondly, if you're new to Canada, most of my clients are new to Canada, right? When you're new to Canada, definitely get your credit built. Definitely get at least 2 credit cards, or if you're getting a car on loan, get additional. So what banks want to see is, if you're new to Canada, if you haven't been in Canada for like 3 years or more, they would want to see you having at least 2 credit lines, meaning 1 credit card or a car loan. It can be 2 credit cards. So they want to see 2 lines of credit, that you have been paying your bills on time, you're building your credit. So this is a very important step for new to Canada. I've seen so many banks declining the application because client doesn't have an history. They come here, they don't even buy.
Even bad
They don't have a credit history, not a bad history. They don't.
Just zero. What's worse, zero or bad?
Zero is bad.
Zero is worse than bad history.
Yeah, if you don't have an history, there's no way they can check.
Yeah.
But if you have a bad history, we can give them an explanation. So let's say you missed a couple of payments, we can provide banks with an explanation, like, why did you miss the payments? Maybe you were out of country. Maybe you were having difficulties. It could be anything. So anybody can have problems in their life.
Yeah.
So bad credit can be something which can be dealt with, but if you have no credit, it's a big no from the banks.
So first step is build your credit.
Yeah.
Don't be an idiot and spend all your money and not pay it back.
Yeah.
Okay. So after you do that, what do you do?
Also, when we talk about alternate credits, right? I see people come in, they even when they have to get a connection, like a mobile connection, they buy it on their brother's name, on the sister's name, or wife's name.
Cell phone,
have your cell phone on your name. That's an alternate credit that lets the banks know that you have a credit. You have been paying your even if it's minimal, right? Even if it's $40 a month, you have been paying your bills on time. They want to see that you are capable of paying your bills on time. What banks want to see is, if you have been missing payments in mobile, you're gonna miss payments in mortgages also, right?
I think so.
Yeah, banks don't like it. They just want to see somebody who's consistently paying their bills. Let it be your rents, let it be your credit cards, let it be your mobile bills. So it has to be there.
Okay, so that's a good first tip for first time buyers.
Right.
What about RRSPs? I know that's a big way for down payment. So
Yes.
maybe you can elaborate.
Yeah, so the third step about being ready of buying a house is getting your down payment. And RRSPs is one of the best tools I've used in the past. I've had my clients use it in the past. So I have clients, making $150,000 a year and not putting money in RRSPs. They're paying $50,000 to $60,000 in taxes every year and don't even know it, because when you're getting a paycheck, you don't even see, the money is going in taxes. You don't even look at your pay stubs to see where the money is going. But how it helps you is, let's say you were to buy a house in July.
Yeah.
And you're thinking about buying a house in February. You put let's say you have a room of $35,000, which is the max you can withdraw when you're buying your first house. So each person, if it's a husband and wife, you can withdraw $35,000 each from your RRSP account.
That's significant.
Oh, that's good. The benefit of that is, the moment you put $35,000 in, let's say you put $35,000 in February, and you are in the highest tax bracket. Let's say you get 50% taxed.
Yeah.
Right. So you're gonna get somewhere around $15,000 to $20,000 back in April. So that $35,000 is already $55,000.
Yeah.
So if you and your wife at $35,000 each, you have $40,000 extra. That $70,000 is now $110,000. Right. So
that's a wealth of knowledge.
Right?
And even me personally, like I wasn't too aware of that. I it's not fortunate or unfortunate, but I never used an RRSP to purchase my first home. So yeah, no, I was actually not aware of that.
Yeah. No, I think I didn't get to use my entire RRSP because I was new to Canada. I did use some part of it, but I couldn't do it because I didn't have a lot of room to put money in RRSP. But sometimes it just matters what works for you, right? If I would have waited to, fill up my RRSP rooms, the house prices have gone up by, $150,000 already. Now, just because I wanted to save $5,000, I am paying $150,000 more.
Yeah, that's the struggle, and I think nobody would have predicted this. Like,
That's
okay,
right.
jump from COVID, and then another jump this year, right? So,
Right.
yeah, it's crazy.
No, it's good. It
But
is.
it's like you do what you can. I tell people, like, as long as it's affordable for you
Right.
and you're not stepping out of your comfort zone to buy a place, and
Right.
especially if it's your first, like if it's your primary residence,
Right.
I think that you should go for it, right?
Oh, yeah.
In the long run, even if it dips now and then it comes back up later,
Doesn't matter.
you're living there, right?
Yeah.
You're not like rolling a dice.
Yeah.
You know,
Yeah.
it's your home. So there's many benefits to getting into the market, although not for everyone. But
Yeah.
if it's affordable and if it's feasible, then absolutely.
Yeah, no, you're right. Yeah, as you said, I mean, it's not for everybody, but I think 90% of people will definitely, take advantage of owning a house rather than renting it. Average rent in Ottawa, it's like 2,000. 2,000 is not even the rent anymore. It's like 2,200 to 2,400 is the average rent. So if you're doing that, you're paying $25,000 to $30,000 every year anyway, right? So
I
if you're
know.
gonna rent for 5 years and you're gonna pay $150,000 in rent, and still you're not gonna own anything. It's better to own a house, buy a house, even if it dips, $20,000 in 5 years. You still saved $120,000 by not paying rent.
Yeah, you're putting money back into your principal,
Yeah.
right? So it's it's like I said, it's not for everybody because there's people that will do better renting. They
Yeah.
don't want any maintenance. They don't want any risk of of things that need to be fixed or
Right.
whatnot. There's many factors, of course, if you're downsizing, for example. But yeah, I think if for the right person,
Yeah.
you know who to call, right? If you
Oh,
want a
yeah.
mortgage.
Definitely, definitely.
Yeah. And then I get this question a lot too, and I'm not a mortgage broker, of course, and people ask me for advice about this: fixed or variable?
Hey, for me, it's always variable. 100% of times variable. There's no question about fixed or variable. For me, it's always gonna be variable. The biggest reason I'll tell you about variable, it's not the interest rate. I know, I mean, variable interest rates are gonna go, it's gonna rise, or it might go down sometimes, right? Even if it rises, the best part about variable is if you're an investor or you're planning to sell a house in 3 years, 4 years, or whatever not. If I do your mortgage with one of the top 6 banks, right, and if it's a fixed interest rate, the problem with that is you're gonna pay at least $25,000 to $40,000 in penalty when you break the mortgage. You sell your house.
Yeah.
You sell your house. You wanna refinance your house. Anything happens, right? Things happen. I mean, we are just human. Things happen, and if you were to sell your house or refinance your house, you're gonna end up paying $25,000 to $40,000 penalty, which is way more than what you will be paying with your variable interest rate. So
Okay.
only that risk itself is enough for me to choose variable. On the other side, I think variable is always gonna be less than what you have with fixed, right? Even if it's not always, even if it's similar, even if I'm getting 2.5% variable and I'm getting 2.5% fixed, I'm always gonna choose variable.
Okay. Now, can you tell me are there any pros to taking a fixed rate?
Fixed rate is for somebody who wanna play safe. When I came to country, I had a lot of influence from the family. You talk to your parents, you're like, these are the options. I was new. I did my research, but I did have influence from the family. I told them that we are getting fixed and variable. I did my research. They're like, it's okay. It's your first home. You don't wanna you don't wanna play gamble. Just go fixed, and that's the way about it. I did go fix, and
I've done fixed too. In the
yeah,
past.
so I did go fix. So my story, I did fix, and 2 years down the lane, I realized I need to refinance my house.
Yeah.
Guess what happens?
Yeah.
I paid $19,000 in penalty, and just because I was in the industry, I did speak to a couple of people. I did talk to the banks and everything. I was able to bring it down to 10,000, but 10,000 is still a lot of money. And if I was in the industry, 19,000 was the call.
Yeah.
Right, it's a lot of money. So
Yeah, for sure. Okay, so there's, I guess, for somebody who is maybe more tighter on a budget, and has exact income and doesn't want any risk.
right. So risk is something which is, if you don't want any risk, yes, fixed is for you. You're like, it's okay even if variable goes down, I don't care, but I just don't want to pay more every month.
Yeah, you know what you can afford, and you know what your payments are going to be
Yeah.
for the next whatever 3, 4, 5 years.
Yeah.
And okay, so that is good for some people.
There's another thing. I mean, if you don't want risk, so I've had few clients. They're like, I don't want any risk. I don't want my monthly payment to go up, but I still want the better interest rate, which is variable interest rate. So we do have static payments with variable. What that means is, even if variable increases, your monthly payment is not going to increase, even if you are in a variable mortgage. So how this happens is, everything happens in the background. Let's say you bought a house, your monthly payment is like $2,000, and your interest rate was 1.5%. Now, Bank of Canada is like, we are going to increase it by 0.50. What happens is your monthly payment does not increase. If before you were paying $800 in interest and you were paying $1,200 in principal,
Okay.
now what's going to happen is you're going to pay $1,100 towards your interest and $900 for your principal. But your monthly payment is not going to increase.
That's interesting.
That's good.
That's helpful for
That's
a
a
lot
very
of people.
good product. Yeah. The downside of this is with fixed, if you were supposed to pay $55,000 in 5 years, with this variable product, with interest rate increased and now you're paying less principal, instead of 55,000, you might just pay 45 or $47,000. You'll end up paying 7,000 less, and
Okay.
over the period of 5 years. But that doesn't impact a lot of people, right? So yeah.
Okay, interesting. Okay, well, thank you for that. That's a lot of useful knowledge that I think myself and anybody listening could benefit from. So that's awesome. And now, I guess going back to, well, not just first time buyers. I guess everybody needs a pre-approval, right?
Yes,
What
definitely.
what is the process of that? And I know I always ask people when they come to me, are you pre-approved?
Right.
Obviously we want to work with somebody
Who was pre-approved?
who was pre-approved, not only for my own time, but for their time, because I it's hard to watch people try to buy a house or look at houses that are a lot more expensive than they can afford, or it happens on the flip side as well, where they think they can afford less than they actually can.
Right.
So I think the pre-approval process is nice, and maybe you could shed some light on how you guys do it and what that process is like, and why you should do it, for the audience, so that we can get more pre-approvals out.
Sure, yeah, definitely. So pre-approval is very important part, when you're going into the market, and you definitely want to have those numbers in your head. If I want to buy a $900,000 house, that's the max I can go, or it's a $950,000 house is max I can go. So how we do is, so there are two things. One is pre-approval and another one is pre-qualifying. So you asked me how long it takes. So if I'm just pre-qualifying somebody, so I do it on the basis of, I just run numbers on, I just take their numbers, take their documentation, how much they're making annually and whatnot, and then we decide on it. I run my numbers in my tool, and I tell them this is the maximum you can go. And this is pre-qualifying them. I can do it, as soon as 1 hour. You just give me all the document, I can pre-qualify you in an hour that this is the maximum you can, or even lower.
So this is assuming that everything that they're telling you is correct. Or do you actually verify this?
I would usually ask for the documentation.
Okay.
So before pre-qualifying anybody, I would definitely want to have a look at the documentation. I would want to have a look at the employment letter, the pay stub, whatever they're telling me is true. So sometimes you think you're making a lot of money, and you are, but for bank you're not. Like, let's say your income is $150,000, but from $150,000, 50,000 is your variable pay. It's a bonus. You get it. I mean, you get it maybe 90% of the time. But if you did not get it consecutively 2 years, so if your $50,000 is not coming every year, bank is not going to consider it.
Okay.
Your income is $100,000. So for you, your income is $150,000, but for bank, it's now $100,000.
Okay. So these are the things that you would do in pre-qualification or pre-approval. Like,
I would
is that both, or
no? This is for both the things.
okay?
So
you
for
do both.
Yeah. So when we are pre-qualifying anybody, so when I tell somebody, you're qualified to buy a $900,000 house, it's 99% of the times, it has to be exact number. That 95 is your best. Go into the market, get the house, you go unconditional. You don't want to put conditions, financing condition, you don't have to. Because I have it on your number, I'm very confident that you can get a $950,000 house. You will get a $950,000 house.
Okay.
So this gives customers or clients who is buying the house, they give them a confidence. I can even write them a letter that I've run my numbers, I've done my due diligence, I've checked it, and you guys are ready for $950,000 house.
Yeah, that leads me to the next thing is I was going to ask you, what are your thoughts on buyers going in without conditions? Because, of course, the last few years, it's been basically unconditional. It's not even a question for most buyers. And there's some buyers that have a very low risk tolerance that say, I don't care. I need a finance condition. I don't want to be stuck, right? But for the majority of buyers that I've worked with, and I'm sure the files that you've seen on agreement of purchase and sale, it is there's no conditions. So how do you advise somebody? I know you just said run the numbers, but for somebody who is scared.
So last couple of years, it's norm. There's no condition of financing. If your offer has a condition of financing, you're not getting the house.
Mm-hmm.
Even if your offer is, the maximum from the lot, you're not getting the house if you have a condition of financing. So if somebody's scared, if somebody's super scared, I need something in writing from the bank that I would not be rejected, or I will definitely get the mortgage. So first thing I do is, as I said, I do pre-qualify. I pre-qualify them that this is the maximum you can go. And if you need a letter from the bank, I send the application to the banks. I have them, check all the documents. So bank will ask all the documents which I have checked. They're in the writing team. They'll ask me questions. Now that process takes longer.
Okay.
So whenever you're doing anything with non-condition to financing, you put an offer, there is no condition of financing. You want to be 100% that you're right. So when I do pre-qualify, I usually tell my clients, $5,000, $6,000 under it. So if they are eligible for $956,000, I tell them, your best is $950. We have a wiggle room, but the safest option for you is $950.
Yeah, let's be safe rather than sorry.
Yeah. And for the clients, for your question, for the clients who are very scared, they don't want to get stuck. They don't want to put an offer and hear by the end of the day that they're not qualified for the mortgage, right? You don't want to be in that position. So for those kind of clients, I send it to the banks. I get a proper underwritten approval that this is the max you guys can get. And when they do pre-approval, they're also the same thing. They're very conservative with their pre-approvals.
Okay.
So for their live deals, we can make exceptions, we can do whatnot, right? But when you're doing a pre-approval, they are very conservative. They'll tell you, at least 10 grand under what you can do.
Okay. And that's all banks.
Most of it, yeah.
Okay.
Yeah.
So now I know. Yeah. Well, if the bank tells me I can get X amount, I just add X plus 10.
Right. Yeah, you can do that.
Yeah. So I think before we get into the last segment, maybe we could take a couple minutes breather, and then we can head into the last couple parts of the podcast.
Yeah,
okay.
Definitely.
All right.
Yeah.
All right. So we're back. I took a bit of a break, and I wanted to ask this question. It's been burning in my heart to ask this. How does a mortgage broker deal with rate shoppers? Because there are rate shoppers in the real estate industry, and people asking, "What's your commission? Is it better than this person? Why is it higher? Why is it lower?" And I think your answer will be a little bit about this. It's not all about just that percentage, right? Yeah. So I wanted to see what your thoughts are, because I get it all the time as well. Like, what's your commission, and that's it. There's no other question, right? So, because I think with mortgages, maybe I think my perception is even more rate shopping, because people are like all about like, what's the interest rate, and that's it. Like, because when people talk to me, they'll say, what's the interest rate right now? And that's all they ask. So maybe you can elaborate.
No, that's true. I sometimes you get calls and clients are like, "What are the interest rate?" And that's it. You never hear back from them, right? So no, touch wood. Fortunately, I I have never had a single client so far who asked me what's your commission, right? Which is so I don't get a lot of rate shoppers. I do get it. I mean, these are cold leads sometimes who just ask for interest rates, and they never call back. I haven't faced a lot of them because most of my sources are referral sources. Most of my clients are the people I know, or the people they know, or they have somebody I have worked with already and referred them, right? And me as a mortgage agent, we are not just we are not the people who just provide you a good interest rate. We do provide you a good interest rate, but we are not people who just provide you good interest rate. We educate you. You know, interest rate, 0.5 interest rate will probably save you $8 a month, but the advice we give you, it's gonna save you $800,000 in the long run.
Yeah,
You know,
yeah.
that's how
what
I
you tell people.
Yeah,
No, that's very true.
which is true. Yeah, you know about these RRSP things. So there are a lot of times I've saved people, you know, $20,000, $25,000. They come back to me. They're like, it was a good thing. Nobody told them. They went to the banks, and banks didn't tell them about it, right? So this is all it is. I mean, and about the rate shoppers, right? I think we provide very competitive rates. We from Referral Mortgages, we provide very competitive rates. We have very good relationships with the top banks, and we are in the top list of some of the banks where they give us the insider rates or insider promos. So if there is somebody rate shopper, we beat the rate 99% of the times.
Yeah. Okay. Yeah, because there's way more than just what's your rate. I think there's things like penalties, right? Like
Right.
every mortgage has different penalties and
Definitely.
whatnot. Like, and I think people get caught up on, I just want the lowest rate, and then they don't look at the fine print
Right.
of the actual mortgage.
Right. No, something about the clients I want to tell them. For clients, it's their number one priority is when they're talking to the mortgage agent. The number one priority is what's the interest rate. That shouldn't be your number one priority. That should be your 11th priority. There
Really?
are 10 more things without the interest rate, right? There are 10 more things. What's the penalty? What's the prepayment options?
Yeah.
There are 10 more things you should be asking. Interest rate should be the last thing. What better service you provide me than the banks? I don't want to say anything bad about the banks, but most of the times when you go to the banks, you're just talking to a teller. He's not even a licensed mortgage agent who can give you an advice, right? He's not an investor. These are just bankers who are telling you, this is our interest rate, and that's maximum they tell you. And when people come to me, I tell them, I mean, whatever interest rate is in the best in the market, we can definitely get you the best interest rate, but that should be 11th in your list.
Okay.
I'll give you 10 more reasons why to work with me.
So it, as coming from a mortgage agent, what do you think is the number one, like, for somebody who's listening and that's looking for a mortgage agent, whether they're in your area or not, or like what do you think one should look for specifically in a mortgage agent?
He should be good with the numbers. He should tell you. So first question, I'll ask my mortgage agent, what will be my mortgage penalty if I was in variable? So I can tell you 70% of the people out there, they can't even do a calculation where they can tell you what's gonna be your mortgage penalty if with the interest rate differential. If you go with the fixed rate, they can't give you an average of what's gonna be your interest rate penalty with the fixed interest rate. That's one thing. He should know, as I said, he should know the numbers. That should be the first priority. He should be giving you time. You call them, he should be available to you. If not right away. I mean, there are times when clients call me, I'm on another call, but I make sure I get back to the clients within 15 minutes of the call.
Yeah, I find that's my motto as well. Being responsive and being available to my clients.
Oh yeah, definitely.
And all on top of clients, other industry contacts, right? So like, there's been so many times when you try to reach, whether it's an agent or a mortgage person or a lawyer, and you have no idea when they're going to call you back. So being available, not just to your clients, but those people are important to facilitate any transaction.
Right. And again, sorry I interrupted, but when somebody's buying a house and they have already put an offer and they have a question, even if it's a minor question, they don't get an answer within half an hour, they're gonna have a minor heart attack. You know, it's very stressful situation for the home buyers as well, right? Even especially when they're first time home buyers, they don't know what's happening. You are the one who has done 100 deals. They want to ask you question. They want to ask you what's going to happen. My down payment is $2,000 less. What's going to happen? Am I not going to get the house? Can you give me a solution? Can you help me with something? Or I'm planning to get $10,000 from my father. Can I do it? It's a simple question of yes or no. I mean, if you pick the call, you say yes. I mean, they're gonna sleep in the night easily. But if you don't pick the call for 2 days, they're gonna have a mini heart attack.
Yeah, there's been in situations you said like, okay, I'm missing $2,000. I've contemplated with, okay, I'll just lend you the $2,000. Just buy this house and we can move on.
Definitely, yeah.
Yeah.
So, see, that's what you are. You are a solution. I mean, you and me. I mean, we are a solution to the clients. If they have a problem, they are $2,000 down. I mean,
we're gonna do something. We're gonna make it happen one way or another.
Yes, right? We're gonna tell them 10 solution. Choose whatever works best for you. So there is solution of everything in the market right now.
Well, that's good to hear. No, because I think of course, just as much as there are a lot of real estate agents, there's a lot of mortgage brokers, and how do we differentiate ourselves from others? And I think for me personally, and I've seen it with you too, it's work ethic.
Yeah.
Work ethic over everything. Like, we may not have as much experience as some other people, but we'll outwork them 10 times.
Oh yeah, definitely.
That's my motto.
Yeah, no, I think that's good. Yeah, I've been working with so many clients who are from Vancouver, from Calgary, different time zones, right? They call me 11 their time, it's 1 my time. Yeah. I answer the call, man. Yeah. I answer the call.
whatever it takes to get it done.
Yeah. So I think I have my time when I stop taking calls is 2 a.m. in the morning, so I don't take any calls after 2 a.m.
Cool. So I think it's been a real pleasure to have you on here.
It was amazing. I've been thinking of doing something like this, and thank you for giving me the opportunity to do it. It's amazing.
Cool. Well, you're the first guest on the podcast, and I thought since we've had such a good relationship, but who better to put on?
Definitely, I'm lucky.
Yeah, you. Maybe I'm lucky. Okay, so we'll hope to have you back. And for anybody who's listening, who wants a mortgage or even just some guidance or just advice, right? I think you offer that as well. I'm gonna leave Paras's contact information in the show notes and description. Yeah, like I said, for anybody who's interested, and we'll take it from there. Okay,
definitely.
It was a pleasure. It was a pleasure, and I hope to have you on again in the future.
Definitely. I would love to be here again. Thank you.
All right, bye. Thank you, guys. It's a wrap.
Thank you. Ciao.